So what happened? What happened is the market basically is having a little bit of a problem because the economy is doing great. I know. What the heck is going on? Well, this is what's going on. What's going on is the unemployment numbers came out today, and we'll take a look at them in more detail. But basically, we are having too strong of an economy. This is something that you need to think about. This is something that you need to think about because you always think, well, you know what? We need to do well, right, in the economy or in the companies in order for the stock market to do well. That's why you realize that you don't understand anything about the market. That's why this market is about one thing, which is has to do with the fact that this is all about storytelling. You need to understand what story is about. You need to understand what the market is talking about. Don't try to understand the numbers. All we have to hear at the in December, remember, all the Fed said was, you know what? What's going to happen here? We are going to have two cuts instead of four. The market, you lost the market. But keep in mind that we have Nvidia that's doing well, earning wise. Tesla is doing well, earning wise. A lot of these tech companies are doing great. Even the small companies are doing great. In fact, they're doing so great that the economy is overheating. So now it's becoming a, a wait and see attitude as in terms of what is the Fed going to do. We are now relying on one person to do something, and we are betting all our chips on that. And frankly, that doesn't make too much sense, right? And that doesn't make too much sense because um, it is not. It has nothing to do with reality, right? I mean, the reality. What is the reality? The reality is the company is doing great. The reality is they say they're going to lower rates. So why is it that we're seeing this red this morning? You're seeing this red this morning because the market has decided that they want lower cuts and they're going to center the story about whether or not they're going to get it. And how do you predict anything on that? You can't. You cannot predict anything. I mean, unemployment is dropping, which should be great. No, that's not good. Okay. Why is it not good? It's not good because the Fed is not going to lower the rates. But how is that bad? It's a good thing that we have unemployment. No, but we want lower rates. And I will tell you why. I will tell you why the market wants and why the market needs lower rates. The reason is that essentially in finance, the value of an asset is driven by two items: the economic values you're deriving from it, right? The cash flow, the dividend, or whatever, and the risk associated with this account, associated with this asset, and the risk is measured by the rate. What do I mean? It's simple. $1,000 forever given to you every year at 10% is worth $10,000. Why? Because that's how it is. So therefore, if I raise the rate, instead of 1,000 divided by 10%, I see 1,000 divided by 20%. Then I don't have 10,000, I have 5,000. And that's what it is. Uh, I'm still making 1,000, right? Yeah. You're still making $1,000. The economy is still doing great, but the market needs those rates. But don't forget, if rates starts to drop, then it's easier for the market, for the stock market, stocks to compete with the bond market because the bond market is all about income. And the higher the rates, I mean, if you could get 4 to 5% risk free, why are you going to bother trying to make 10% with a bunch of risk, which you can't really measure? What do you mean you can't measure? Well, do you know how to measure the risk of investing in stocks? You don't. Oh yeah, you have the beta, but the beta doesn't measure anything, right? But when you're looking at the risk of investing in treasury security, oh, you know what the risk is. There's none. And if something a little bit more riskier, then it's easier to measure. So obviously, this is a big deal. This is a big deal. You may not like it, but it's a big deal. And the market does not, because it doesn't matter how much money you're going to make with your company, because the stock market is not about you as a company making money. They don't care if you're making money or not. All they care is the stock going up or not, right? And this is where it gets interesting because now, so I have the price risk, correct? The price risk, the risk of the stock moving itself on its own, doing whatever it is for whatever reason, and then you have the credit risk. So right now, the credit risk is doing great. Economy is doing well, less unemployment. So this is fantastic. So the risk, the credit risk is moving up, doing its thing, and it's fantastic. But the price risk is going down. This is what's happening here. You see, this is what's happening. You don't want that, right? You want that, or you want that, meaning stock going up, but the economy is going down. But that's not going to happen. So now you're in a very, very difficult situation. Let's take a little break and let's take a look at what's actually going on in the market to get a feel for these things. You see this? Okay. So what's going on right now? Well, right now this market is still closed. Now, what I want to bring your attention to is this decline, 32%. So we see you have 3,000 an item declining. That was from, yeah, but I think this is as we speak now. But even if it was for yesterday, more decline, more new lows. Um, we are below the 50-day moving average, which is not never a good thing. And we are below the 200. So we're heading south, people. Okay, the moving average is we're underperforming the moving average, and you could see on the right, everybody's going to hit at the same time. Now, believe it or not, this little chart here, this beautiful red-looking chart, um, might be is interesting, and I'll tell you why it's interesting. It's interesting because all the stocks are moving down at the same time. Are you telling me that they're all doing wrong? They're not doing well? No. Some company are doing fantastic. Nvidia is doing fantastic. Microsoft, Apple, but the market has a mind of its own. And in statistics, when you're trying to predict something, right? You're basically saying, if I have a coin and I flip it, I mean, the odds are 50-50. That's in principle. Why? Well, because we assume that the way you spin one coin is not going to impact the way you spin the coin again and again, right? The way you're behaving, one spin doesn't. The events are totally independent, but that's not the case, unfortunately, and that's what you're seeing. What I mean by that is that stocks are all driven by each other. They're all impacted with each other. So how can you possibly predict anything if they are all impacted by each other? There's no way you could create a formula Statistically speaking, that's going to help you understand how one stock is going to move the other. It's impossible. So what do you mean? Well, I mean that then you're in trouble. You're in trouble because then you cannot predict anything. So then it goes back to what I've been saying all along. It's all about the story. So let's take a look at what actually happened this morning. Okay. And you could see here that the on farm payroll was 256,000. We were expecting 154. I mean, payrolls increased a lot. Private has increased a lot. Unemployment rate is down. These are very strong number. There is no way the Fed is going to look at those numbers and is going to see, oh, you know what? I need to stimulate the economy more, therefore I'm going to lower rates. That is not going to happen. The problem that you have now as a Fed is that you're supposed to know what you're doing. So why did you lower rates earlier last year? I mean, not too long ago, but it's still last year. Why did you lower those rates if you thought that the economy is actually not slowing down? Oh, you didn't know. You did not realize that wasn't the case. So when you lowered the rates, A, you didn't know what you were doing. B, since there was an election, maybe you wanted to help the other guy. You see where it gets very tricky here? You see where it gets interesting? And you see where it gets dangerous because now we can't really trust the Fed. What is actually driving the Fed? They made a mistake. Well, they said we're going to be data dependent. Well, then if you're data dependent, you're definitely not lowering the rates. Okay. In fact, and he probably won't do that because then you just leave. You're not going to raise rates. But now that's a question. Okay. So what do we do with this information? Because on top of everything else, I hate to remind you that you must, oh, because these are the things that we know, right? We know about what's happening. We could see what the Fed is doing, or I mean, what we see what the numbers are for the economy, right? We know what the stock market is doing right now, and we have a sense of what to worry about. Well, hold on. One thing you need to worry about, as Socrates always said, worry about what you do not know, what you do not see. Now, January 20th, Trump is coming in. I hate to say it, but if he keeps talking about tariffs, that's also going to put more pressure on inflation. But forget that because we kind of heard that story already. You need to worry about what you don't know. What you don't know is what is he going to do about Canada, about Greenland? I mean, what's going on there, right? Um, I mean, there may be very good reason for doing what he's doing, but we don't know. And you're not going to know because if you know anything about Trump, he's not going to tell you what he's going to do because you don't negotiate open ended. Okay, you don't know what he's going to do, and that's a problem. I mean, it's a good thing for him because you never knew. So when you negotiate with someone, you should never tell them what it is, so they don't know where you're coming from. But the market, obviously, besides this thing about the story, the market hates uncertainty. And I don't know, you are looking to invade Greenland? You're looking to buy Canada? Of course, you can say this is ridiculous. Well, it might be ridiculous, but when the people in Canada are telling you, no, this is not going to happen, the fact alone that they're saying it is a problem. You shouldn't even mentioning it. If it shouldn't be a possibility. Now, of course, we just lost a prime minister of Canada. Okay. So obviously they don't now that could be a good thing because they don't want anything to do with the tariffs. So this geopolitical thing is a problem at some point because we don't understand it. You don't know what he's going to do. You don't know how they're going to react. You don't know lots of things. And that, my friends, is a problem. All right. So what do I do as investors? What do we do, right? What's the issue? What can we protect ourselves? Well, it's very simple. You have to realize that you know that you don't know. You have to realize a lot of uncertainty. So how do you make money in an uncertain market? You don't sell. You don't sell anything that you have. Why? Because the economy is doing well. I mean, why would you sell stocks and company? I mean, eventually, stocks I'm talking about, right? If you have options, a little bit different. But in terms of stocks, you own the stocks, hold them because the company are doing great. The economy is doing great. They're not going to go bankrupt. Okay. But you want to make money in an environment like that. And it's difficult because nothing is going up. It's going down. What's going up is going down. It's going up and down and down and down and up and down and down. So what do you do? Well, what you need to do is if you haven't invested, you wait for the right price because don't forget these companies are doing great. So you just pick them at a very cheap price because don't forget, I mean, the market is quite highly valued right now. The P ratio is around 20, 22. Last time we were at 25, we collapsed in 2000. So we are pretty highly, but as long as we understand we seeing the risks and we talk about it, then you're not gonna have a crash. The thing is, you don't want something happening like wow, you get up on Monday morning and something happened, then you could have a potential crash. But that we are kind of know everything that's happening. I mean, we don't know how it's going to develop, but we know what's happening. So we're pretty safe on that end. But so what do you do? Well, just buy some puts in the stock market. Buy puts, make money on the way down. No, don't buy puts for the week or the day. Don't go crazy. Do 3, 4, 5, 6 month puts because now things are going to go up and then they're going to go down again. The market right now is very, very, very fragile because it decided to focus on those rates. Now, why is it focusing on the rates? Because, like I said before, it has to do with valuation. And now you need to guess what the numbers are going to be and guess what the Fed is going to be and guess what the political situation is with the Fed, the reputation of the Fed. And then, of course, you're going to listen to the entire YouTube sphere and the whole CNBC sphere and the Bloomberg sphere. You're going to get lots and lots and lots of views. You don't want views. You don't want to listen to what they're telling you. You need to understand what's going on because you need to make up your own mind. You just can't go and do what they're telling you makes sense because it might make sense to them because they have the appropriate portfolio. So you don't want to do that. You want to be as you need to use this to understand what's going on. Okay? So if we let's see this is nasty. Let me share you. Let me share with you what's going on in the market right now. Okay. 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 So we are basically red. We are basically going down 300, 242, 1.75%, 1.3%, 0.9%. This is going to hurt. Okay. Now, keep in mind that S&P wipes out 2025 gain. 10-year treasury yield spikes. Obviously, as the yield spikes, it competes with the stock market. So do you want 6% free or you want to be 20% or 10% with some risk that you don't understand?